Hey guys, here I am in Nevada with P2 Gold at their Gabbs project. I'm here with Ken McNaughton, who's going to show us around. This has potential in terms of scale. It's got the infrastructure for sure, and potentially a tier 1 jurisdiction. But let's go find out for ourselves. Right, here we are, pretty much bang smack in the middle of the Gabbs property. Here with Ken McNaughton, COO we're going with? Or
CEXO.
Sexo.
The Sexo,
nice.
That's right.
Okay. You learn something every day.
Yeah, Chief Exploration Officer is what it is, yeah.
I'm glad you clarified. Right, so we drove in this morning up a kind of path. We've had a kind of sort of look around ourselves, but we're standing here with you, going to take advantage. Maybe you can sort of tell us exactly what we're looking at, the extent of what you walked into day one and what you've been doing since then. So what is Gabbs?
What Gabbs is a copper gold porphyry system, quite unique for this area. There's some great geologic reasons why we're here. And what that gives us is the ability for scale and economic. So, you know, as you look around, you can see roads, you can see power lines, you can see historical mines, you can see infrastructure, we've got water. So Gabbs is an extremely viable project that's been overlooked over the years because of the copper gold association. But, you know, with the advent of SART technology, we're able to extract both the gold and the copper and produce a very viable mine.
Right, and let's just take a look around us at the moment, because it is big.
Yep.
I know you've got a PEA in place, and there's a bit of work going on there in terms of continued infill drilling and expansion drilling, etc. But you know, when you started off, how did you view the opportunity here when you're looking around? Because you've got Lucky Strike somewhere down there, I think.
Yep.
Sullivan's over there.
That's right.
So how did that kind of work start and progress?
The history of the mine started, well, you know, back with the old timers, late 1800s. Modern history in the 80s and 90s, a number of companies came through. And because they didn't have the SART technology, they were focused on either the gold or the copper. And it didn't really work as separate deposits. What we saw was a lot of shallow drilling that mostly stopped in ore. So Sullivan outcrops, and so had a lot of work done on it. We saw the exploration potential there. There'd been some drilling here at Lucky Strike, but not a lot. But it looked very similar. So we said, look, there's potential here for 150, maybe 200 million tons. We just need to come in and drill the full thickness of the system and find what's there. And then at the same time, we had a lot of historical engineering and metallurgical work. Let's build on that. And then through some consultants, the SART process, and did all that work.
Right, so you're solving for it technically.
Yep.
And you're solving for it in terms of scale of the opportunity. Just give some of the headline numbers in terms of the grades around the gold and the copper that you're looking at.
Well, we can get up to, you know, for the full thickness of the zones, we can get up to a couple of grams, but our average grades are in the 0.5 to 0.6 gold range, and, you know, pretty consistent 0.2 to 0.3 copper.
Right.
So, and then a bit of silver. We you know, we'll produce 4 million ounces of silver with the operation.
Okay, and when I've talked with Joe and you in the past, obviously the number's been based off of the PEA, but you're working towards this feasibility study by at the end of the year, the engineering as well, taking a look at that. What do you think the opportunity is here?
Well, scale. Let's make it bigger. The PEA really was a scoping study. Let's optimize that. So in the PEA, we had the mill coming on in year 6. You know, we now know it's better to come on in year 3. We chose 9 million tons because of the 9 million tons a year because of the resource. We now feel 12 million tons a year. So looking at those opportunities, and then, you know, our metallurgy, we've been able to increase our recoveries. We produce great concentrates. We produce doré. It's just a fabulous mine to work on.
It also changes the output economics at a time which seems quite opportune. You know, you're moving towards, you know, somewhere between 100, 150 ounces per year.
Yeah, that's our target.
Yeah.
So we've got to get, and we may exceed that, because the grades that we're seeing at Lucky Strike, the infill grades are higher gold than what the historical drilling had. So hopefully we can do better. But yeah, by increasing the throughput from 9 million tons a year to 12 million tons a year, just by virtue of more tons, our production goes from 110-ish thousand ounces of gold on average to 150,000 ounces. And we may exceed that.
Right. And I think just one of the things that kind of lends comfort to you is the simplicity of the mining we're talking about. I mean, just looking around now, you can practically sort of see where you're going to put everything.
Oh yeah.
And also, you know, where you're going to go first in terms of that kind of sequencing that you're going to follow. What's that do for the economics, do you feel?
Oh, it's right there. Sullivan's sticking out of the ground. So yes, there's some pre-strip, but there's not a lot. It's right there. And the best grade is on top. Actually, Lucky Strike actually does come close to surface. So in terms of us getting started, we have some pre-strip, but not a lot.
Right.
The access is there. You can see when we need to lay down for construction, well, like look at the real estate. We need room for leach pads and for tailings. Well, we've got it. And we don't have any neighbors immediately next to us. So it all lends to the economics. It all lends to the ease of building. It makes it the permitting. There is no easy permitting, but it makes it straightforward. There's no major red flags that come up anywhere.
Right, and ultimately, you know, time's money. You're looking to get into production sometime in 2029.
Yep.
Quite accelerated time frame.
Yeah, well, you know, we did Bruce Jack in 7 years, discovery to pouring gold. We feel with the heap leach capacity, or starting the mine as a heap leach, that's a much easier build, and that deals with the oxide. And so by going heap leach, we're pre-stripping for the sulfide. So it all fits, and we can hit that time frame.
Nice. Okay. Well, why don't we pop down and we're going to go see Sullivan now.
Yep.
Take a look, maybe stand in the middle of the pit and take a look at what you're getting after.
For sure. It'd be great.
Come on, let's do that.
Go. So here we are in the middle of Gabbs, and the first thing to notice is the pit across the way. That's the Sullivan zone. So as you can see, it obviously outcrops. You can see all the roads from the historical drilling, which we continue to use. That really helps us out with our permitting. The Sullivan zone was drilled historically. What we've been able to do is expand it to depth and down dip. So it's gone from well, basically 1.7 million ounces gold equivalent. We think we've doubled that. And that was the majority of the historical resource. As looking at exploration potential, we have this old working down below us. This is the gold ledge zone. Now we're not able to work here right now because we're working on 2 permits. One is for Sullivan, the other one is for Lucky Strike. And in order to have 2 permits, we have to keep them at least a mile apart. So we can't work here yet. But I point that out because there are a lot of historic workings, including the old Gold Ledge mine. And what we saw at Sullivan and what we've seen now and are developing around Lucky Strike is the fact where these high-grade mines are, even if we don't see the zone on surface, we know that there is a porphyry system below it. So the great thing with that is we've got Sullivan with 70, 80, 90 million tons. We've got Lucky Strike, which I think we're going to get up into the 100 million tons. And we've got Gold Ledge in between, which in fact has had no work. So what potential have we got there? Over in this direction, you can see where all these drill pads. This is the southern and the southeastern extension of Lucky Strike. And some of this we knew from historical drilling, but there wasn't a lot of historical drilling. And as we've come in and we've been doing our infill drilling, what we've seen is we've got exactly the same ore controls as we had at Sullivan. We come in through a barren hanging wall of gabbro, and when we get into the quartz monzonite, there's our zone, and it's the high-grade zone. We just released a great result of 5 feet of 183 grams, meter and a half. It was a great hit. But all of that system is blind here. But again, because we had the historic workings and we've been working out from that, so we know we're going to be able to extend that across. Ultimately, I believe Lucky Strike is going to eclipse Sullivan in terms of tonnage, where we had 80, 90 million tons there. As I say, 120 to 150 million tons. We've got more exploration to do in between, and then we've still got, car body and all the things to the south. So great expansion potential, great economic potential, great location, great deposit, great mine.
So here we are in the pit. It might be an opportune moment to kind of talk about the kind of economics around this and how you think about it.
For sure.
We came in on a paved highway. We saw the power coming into sight, but it gives us a sort of clue as to maybe the simplicity of what we're looking at here. But how do you view it?
Well, really, I mean, first off, we are able to drive right into an outcrop of high grade. So we've got exposure. We've got ease of access, as you say, we've got all the infrastructure. And then really for us, the economics are fantastic because we can start with a low-cost heap leach operation. There's a very large sulfide deposit below this, but we transition into that. So we're going to get 2-3 years of nothing but oxide, and then we can stage our development. So that's going to really improve our economics and allow us, rather than having to build a massive project up front, we stage into it. So we're very excited. And then, as you say, just the access. I mean, you saw the roads as we came in. We're able to drive to this. We've got highway, we've got power, we've got water. So every ingredient you need to build a mine, we have it. Just keep checking those boxes.
Right. And if I can look at projects like this, we've been driving around Nevada for a while now. There's obviously a lot of mining history to it.
Yeah.
You're coming at this with access to a ton of data as well. How's that informed your decision making?
Oh, it's been fabulous because we didn't have to discover where the zones were. We've had to define and understand the geology better, but the discovery risk was off the table, and that was done 30 years ago. So for us, we've been able to take that data, recognize the potential, and then expand upon that. So we came here and we in fact have doubled the resource here, and now that we're understanding Lucky Strike, we're actually think Lucky Strike, which wasn't drilled as well, has so much greater potential. So that historical database is a godsend for us.
So, but if you look at the kind of, I mean, most investors want to see some kind of scale to this, and I know you're at a point now where you're going to be looking at some infill drilling, some expansion drilling, and some potential kind of satellite type discovery work.
Right.
What are you going to do in terms of the sort of timing of this? Because when we talked last, you, Joe, and I talked last, said, right, we think we can accelerate the time frame in which we can deliver production.
Right.
How do you get that balance between showing scale and getting cash in through the door?
Well, we've done that already. Just by virtue of our PEA, we recognized that mine plan was too long. So instead of coming at this at 9 million tons a year, we announced we've actually decided to go to 12 million tons a year. So we're going to advance that. We've advanced the mill, we're bringing that forward. So instead of bringing the mill on in year 6, we're bringing it on in year 3. That's the current plan with the feasibility study. And so with that, then we're going to take the existing resource and mine it faster, but then we are expanding it. We have in fact expanded Sullivan, so we've got some deep drilling to do to bring those resources up to indicated. As we've been talking, the Lucky Strike has incredible potential, and we're stretching that boundary on that to where we really, I firmly believe it's going to eclipse Sullivan in terms of the potential. So the thing for us is to stay focused. We've got a feasibility study, and we'd like that 150, 160 million tons, so we have a 12-year, 13-year mine life. But then we've got more to do after that. But that's a pretty good thing to get started on.
And of course, the timing of the mine planning and the engineering work is what, by the end of this year we're aiming for?
Yep.
Or, okay, yep. So that kind of gives us an indication of how quickly you guys are going to move through to this. And you talked about production in 2029.
Yeah.
I assume first half of 2029. That's sort of
somewhere in there.
Somewhere in there for sure. But again, I'm trying to get a level of confidence from you about, so, you know, what are the other factors that we perhaps don't think about as retail investors that are important to you?
Well, you know, permitting is the other thing. Now, you know, in the government, there's a strict set of rules that we have to adhere to. There's a lot of studies that we have to do. But rather than waiting to be told, everybody knows what has to be done. You drove by several mines on the way in. There's mines all over Nevada. The process is pretty well defined. Every project is unique, but the process is defined. So we've already started a lot of our baseline studies. We've got our engineering work going. We're well through our metallurgy. We've already done optimization on the mine plan. Now we just need to provide that updated resource. So rather than waiting for things to happen and then starting, we know what needs to be done. Let's just get it done. So that's why we can push for that year-end feasibility study, which then gives us the mining plan of operation, which allows us to do more work. And it also sets the terms of reference for the EIA or EIS, whichever route we end up being pushed down. But that's okay. We've started those studies as well. So then we get to the end of 27, and we're fully permitted, you know, touch wood, and then we're into construction. And that's where the stage construction comes in, because it's not a mega mill and mega, it's a heap leach, which is pretty much milk toast for Nevada.
And of course, we haven't quite got there yet, but Gabbs is just down the road here. What's that do in terms of, you know, where you pick up, you know, staff to work here, where you pick up the operators to work here, the drills, etc. How does that help?
Gabbs is very small, and it's helping us right now because all of our drillers stay in Gabbs. We ourselves come in out of Hawthorne, but the drillers stay there. So it's a great, there's a little magnesium mine that's the longest continuously running mine in the US is that magnesium mine at Gabbs. It's a mining history, so there's support there. But more importantly, from bedroom communities where people will come in and out of. Fallon is an hour away, Hawthorne is 45 minutes away. So not only do we have you know, a very good base of people that are resource people and heavy equipment operators and that, but you've got a community that knows mining and welcomes mining rather than putting roadblocks up.
Interesting. Well, like, earlier on today, we were up in a high point taking a look around the site. One of the things I spotted was I think it was a transformer, was it?
Yep.
Let's go look at that.
Yeah, for sure.
Come on. So Ken, a few moments ago we were over at the pit. We talked about the kind of infrastructure benefits, and I thought we'd maybe take advantage of this vantage point and take a look at exactly how close you are. So here we are at the substation. This is yours? This is on your property?
This is on our property. We're in the middle of the claim group right here. So this is power in and power across to another user. And then in addition to power, as we were discussing roads, we've got a highway out over there, roads to all of the known zones. So very well serviced in terms of infrastructure, access infrastructure, power, water. we've got it all right here.
What's that do for the business economically, or in terms of saving time? And
Oh, incredible. So yeah, I mean, on the water, we purchased water rights, so check that box, it's done. You got to have water to operate a mine. You need power to operate a mine. Well, it's here. So we've got some engineering to do to tie into the grid, but it's here. We don't have to worry about bringing in a 20, 50-mile line to come into here. Road access, it's been fantastic for our exploration, because not only does it give us access, but it's pre-existing disturbance. So we don't have to account for that in our permitting. Only the disturbance we create as part of our drilling. So it's really been able to allow us to expedite our drilling and focus on this infill expansion drilling.
And does that help for attracting like staff, from further afield as well? They can get here quick.
I think so, yes, is the short answer. Yeah, we're sitting, as we've been discussing, in a mining district. There's mines all around us, historic and operating, and so that talent is available in the local communities. They understand resource extraction, they work with it, they work with heavy equipment.
And of course, I guess the time savings, you're not, like I say, applying for permits and permissions to actually build this stuff, let alone have to pay for it. So all good news to the bottom line. So Ken, we've been talking a lot about infrastructure, and you kind of got those water permissions earlier in the year, and I think the kind of infrastructure benefits of this area cannot be overstated. Water, tell us about how you're getting after that, how are you going to solve for that problem?
Right, so as on the access, we're drilling our production water well out by the highway. The mill facility and everything is going to be out over there. Just behind me here, we have to develop a hydrogeologic model in order to support our permitting and the engineering for pit dewatering and everything else. We've got to do some pump tests. So the road we drove in on, that's going to be upgraded, and all of that well equipment's going to be brought out here. And this is a site where we're going to be drilling a pair of wells. So we'll drill a pump well and a monitoring well, and then on the other side of Lucky Strike, we're going to be drilling another monitoring well. Plus, we do the same thing over at Sullivan. Yeah. So we've got a lot of infrastructure that we have to put in, but all of that, one, will aid eventual operation, but it's for us to develop the engineering and the permitting that we need to move the project forward.
So the untrained eye, I'm looking around here and going, this feels like desert to me.
Yeah.
Where's the water coming from? Where's the water table? And how easy is it?
Well, it's difficult, and if there was no water, well, we'd have other issues to deal with. But basically, the water from here is probably coming from the mountains just in behind us over there. So there's actually pine forests and everything up there. Not that we impact on that, but that high ground is what supplies these aquifers. And so, and here, as we stand here, we'll find out, but the groundwater's down 400, 450 feet. Right. But our pit goes down 1,000 feet. So we're going to have to deal with it. And then there's Paradise Peak, obviously, right there as well. They've got water in their pit. So we want, there's no use putting our head in the sand. We know we need to establish our hydrogeologic environment. Let's develop that. Let's provide all that information for the permitting, and so everybody knows, and we move ahead.
So Ken, we're on your boundary line here at the moment, but I noticed this. What are we looking at?
Well, what you're looking at is a historic FMC mine. That's the Paradise Peak mine, developed in the 90s, produced 40 million ounces of silver and 1 million ounces of gold.
Right.
Stopped, they've just mined the oxide, put it up on a heap leach, stopped in the sulfides. It wasn't economic for them at the time.
Right, okay, and I think Joy pointed out to us, you got Rawhide just up there as well, and that was a former silver producer.
That's right, and it's still in production or in the waning stages. But so within this district, we've got the Santa Fe mine that you drove by on the way up. The Round Mountain is just in this direction. I mean, we are surrounded by very noteworthy mines here. So here we're at the old Lucky Strike mine. Some of these workings date back to the 1880s, and then a lot into the 50s and 60s. And basically, this is the only expression of the Lucky Strike zone that we have. There's very little surface outcrop, but because these mines were here, we knew something was happening. And then, as it turns out, in this very spot, while surface rock is more or less barren, we've got 100 meters thick of good mineralization. So these are a real key for us continuing our exploration and expanding the zone.
We've come down to the core shack where we're outside seeing some of the historical core. In here, some of the new drill results that we've been looking at all day. The team working hard up at site. Mm-hmm. We're going to get more of this coming through. But talk us through how you've interpreted the drill results as they've come in. Has that changed your thinking about what you've got and how you get after it?
Yeah. What's been a pleasant surprise has been the continuity and the ore control. So, you know, in general terms, hanging wall of a gabbro, and then we see this quartz monzonite, and that's where our high grade is, generally where the best gold copper are, and then we go into the proxenites, and that then mineralization starts to attenuate below that. And that has been boringly repetitious. So in this type of deposit, boring is great. It just means everything is the same, and when we see it, we get minerals.
Right, and now this, you don't do it all on your own. There's a big team around you.
Yep.
Boys and girls who've been working in Nevada, but also been there and done it before with you as a team. Who are the people who are actually active on the ground making this happen?
Well, two of the key people that we couldn't do it without our project manager. So the first person we hired was Fred Brown, who Joe and I have a very long working relationship with as a consultant. Then Fred came to work with us in 2021. And last fall, when the program got bigger, Fred said, hey, I need help. You've got to hire Joy. So this is Joy Lester, who is the other project manager on site today with us. And she has quantums more information on the rocks and things than I could possibly have. So, Joy.
Thank you, Ken. Yeah. Well, yep. So basically what we're looking at is the split core of a particular hole that we actually just released the information on this. And it's a nice surprise for us because as you talked on the outcrop, the grade of the deposit is around 1 gram, a little bit less in terms of the gold quantity. But in this case, we actually hit a really nice, what I would call bonanza intercept. Yep. We have visible gold in our core, and it's high grade when it's visible. And when we talk about our geology, it's unique in the region. We discussed a couple of satellite mines and neighbors at the project today. Most of those people are mining in tertiary volcanics, younger rocks,
much younger rocks,
and in epithermal systems. However, our rocks are Jurassic rocks from an old island arc, likely accreted onto the western United States continent, and then a monzonite or porphyry system intruded it. Completely different from the tertiary epithermal systems. And it's that porphyry model that brings us into the hydrothermal environment that resulted in our beautiful gold mineralization, the endowment here. We've got some other deposits in the area that we can draw correlations to, particularly in Yarrington. The Ann Mason copper deposit has been documented to have multiple phases of monzonite, similar geochemical signature to ours, and we're working on studying those things forward and trying to prove exactly for sure the deposit genesis.
So that's what's interesting. So it's not similar to those around you. There are some pretty big mines around you, but you're saying it's slightly different sort of architecture in that sense. So Yarrington, how far away are they?
Yarrington, as the crow flies, I'm going to say about 100 miles.
Right. So what's happened there?
In geologic reconstruction, we can talk about the Yarrington. It is a classic copper porphyry system, which is sort of like a root system inverted. And it has a lot of intrusions underneath of it, and deep, 5 to 6 kilometers deep or more. This deposit, during the geologic destruction of Western Nevada and in the tectonic events, was the crust was stretched apart, and that deposit rolled onto its side. It was slid down onto its side. They are mining it from the side down. So we have a complete cross-section of the deposit, and they're able to study all kinds of things that normally you don't have access to in porphyry systems because they're kilometers deep. Where here it is at surface because it was rotated. So we're taking that information, looking in forensic detail of what the monzonite, the host rock looks like, and we're correlating that with ours. And I believe we have an analog.
Really? And so how long has that sort of thesis been on the table?
It's evolving. When you talk about evolution, you know, there's been some studies here and there's been some historical work, but really bringing Joy and Fred's information, like they're regional, not just property specific. So very much relatively new, but evolving.
Interesting. And obviously that's culminated in being able to kind of hit targets like you announced yesterday. So can you remind me of the grades we're talking about here? Because Bonanza always sounds interesting. Okay,
yeah, this is a great example. If you can see all of these core boxes on the table, we have about 20 boxes here. And this represents a zone that was reported in our recent press release, 175 feet at about a gram of gold. So when we look within the details of that, we actually have some sections that are much more enriched. We can look at this and we can say there's 65 feet within this, so that would just be that half of this, only half of this, 65 feet at almost 2 grams, and 0.35 copper. Right. But within that, however, we also have a 5-foot interval of extremely high-grade gold, 183 grams, and 4% copper. Right. So that's the sweetener. And that is unusual in what we have intercepted so far in the deposit, but it's a testament to the power of the system.
So what, obviously you want to kind of get after that and sort of have a look at, you know, where that's coming from, where it's gone. Yeah. What do you hunt down then? The monzonite that you talk about, is that, where did that appear?
Oh, well, it just at the top of the section. Right. Is when anything above this, we were up in the hanging wall rocks, we were coming down through it. That's the top of the monzonite there. And then the high-grade system, the high-grade bonanza, if we're going to see higher grade spikes, they tend to be in that top 10, 20, 30 feet of the monzonite. And that's been consistent. You look through the deposit, if we're going to see those high-grade spikes, they're generally near the top of the system. Right.
Yeah. It must be exciting for you. You come in thinking you're
spectacular
looking at one thing, and then you're starting to hit these higher grade numbers.
You know, as we talked about out in the field, Lucky Strike just keeps surprising. It's surprising on the upside for size. Yeah. And then like this type of hole is a bonanza hole in any camp in the world. Yeah. So yeah, it's lovely.
So it's like, let's remind ourselves, we just sort of talked about this earlier in the day, but just in terms of that kind of infill, there's a job to be done there, right? Yeah. But in terms of that kind of step out and discovery potential for you, does that change your mind any in terms of how you allocate capital, or is it all on the feasibility?
This is part of the feasibility. Yeah. My target is to have 150 million tons of ore grade material up to indicated classification. So we've got more than that is inferred, but we've got to convert that. So we've got to expand these known zones, push the grade, 150 million tons minimum. That gives us a 12-year mine life at 12 million tons a year. So that's the sweet number. So when you say capital allocation, it's all going to the feasibility.
Okay. Staying commercial.
Yeah.
Great.
Yeah.
Right, we've just finished the tour of the P2 Gold site here at Gabbs. I came here to try and understand the scale, the infrastructure, and just how they're working towards production of this Tier 1 site that they've got. I came away with a very strong impression from the team, which I was lucky enough to spend a bit of time with, how they're getting after the delivering against the scale with their drilling, infill drilling, expansion drilling, etc. The infrastructure is phenomenal here. We drove here on a brand new, I'm going to call it a highway, surface road, water on site, energy on site, everything you need for the easy mining. The team also, as you'll understand, and now we've had a bit of time to spend with them, they've been there and done it before. They have built mines before. They're doing it on an expedited basis. They've got the cash they need to kind of get after this thing properly at a time when the market is looking for projects which can deliver 100, 150 and beyond ounces of gold. So continue to like what I'm seeing here. I continue to like the pace at which they're working. Has this thing got further to go? Has it got more growth? And will they try and drive that valuation? I think so.